Hello everyone, thank you for joining us today and welcome to this Specialist Trading educational presentation. Now today I'd like to talk to you about a strategy designed to buy low and sell high. Now if you're familiar with my free webinars that I give every Wednesday, you'll probably know that in the past you've heard me say to never buy low and sell high, because if you're doing that, this means that you're most likely trading against the trend. You're buying in a downtrend and selling in an uptrend. But with this specific strategy I'm going to be sharing with you today, I'm going to teach you and show you today actually how you can buy in an overall uptrend, I should say, at lower prices and sell at higher prices in an overall downtrend. In fact, I'll give you the tool to do that in just a few minutes. For example, let's look at this chart here in Apple. This is a fairly recent chart of Apple coming into the last week of October here. As we can see, we've been going steadily up. But markets don't usually go straight up or straight down. That can happen every once in a while, but overall, I would say about 80% of the time, markets have a stair-step type of approach into the way they trade. Now, looking back in hindsight, sure, we've been in an uptrend, but all along the way, we've had some steep declines, like right here. We had a very sharp decline, okay? And then we bounced back up again. But then we had another decline, and then we bounced back up, and then we declined one more time until we bounced back up. This is the way markets are structured. It does the same thing to the downside too. You'll be going lower and you'll have a little bounce, then go lower and have a bounce, and so on. Now, looking back in hindsight at this chart in Apple, then obviously, if you would have known that we were going in an overall uptrend, the ideal places to buy would have been right here at these little sell-offs, at these little downward trends here. Well, with the strategy I'm going to be sharing with you today, it actually generated buy signals here, here, and even here. So this is what we mean by buying low and selling high. You're still in the overall uptrend, but you're buying at the lower realm of that trend. Now, had you taken this very first setup back here in August, well, you could have potentially captured 38 points in 2 months. Now, all the charts you're going to be seeing today and all the displays have been generated using our PTS Primo charting platform. This is the educational platform that actually teaches you how to buy low and sell high. There's an actual process in doing that, and we have it really simply calculated on our platform for it. So this promises to be a great educational presentation today. Thanks for joining us once again. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my webinars, we are all about teaching you how to trade. I know a lot of the times you've gone to presentations in the past and you said, well, Steve, how come you didn't tell us what to buy next week or tell us what the best market is or the best time frame? Is because we don't believe in that. In other words, we're simply trying to educate you with all the things that have stood the test of time so that you can ultimately make your trading decisions on your own. You see, it's my belief that the only way someone becomes a consistent trader is by making your own trading decisions. And I can say that because I've been trading for nearly 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist, if you're not familiar with what that is, it doesn't mean you're any more special than anyone. It just means that you specialized in making markets in roughly about 50 or 60 stocks. So if anyone wanted to buy or sell a particular stock, they had to go up to the trader who specialized in making a market in that particular equity. So I did that for 9 years. I was a specialist during the crash of 1987 and the bull market that followed. So I've traded straight up markets, straight down markets. I've traded sideways markets, volatile, non-volatile. I've traded just about every system, every method, every strategy you can think of. It's probably, if it's something new that someone is promoting, trust me, it's been around already. They just renamed it, rebranded it, okay? What we do at Specialist Trading is just teach you the things that I've accumulated in my over 4 decades that have showed high levels of consistency. Then we work with you so that you can ultimately decide which entry or which exit or which stop placement works best for you. So we're first and foremost an educational company, and you'll see our devotion to educating you in today's presentation. Now, before we begin, as always, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using Strategy 9 in a lot of different markets and also different directions. But please remember that we can in no way guarantee that any of the results you're about to see will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, as you're taking a brief moment to view the disclaimer, also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. You may want to copy down our handle right there. I post different educational things on a daily basis, things from signals our strategies have generated to little bits of financial wisdom. So lots of great free education. Feel free to follow us on Twitter. Now, as I stated, we are different from other webinars you may have attended in that we're not going to tell you how to trade. If you've come here thinking that I'm going to tell you what to buy or sell tomorrow, or what the perfect market is, or what the perfect system is, you've come to the wrong place. That's not what we do. In fact, that goes entirely against all of our principles. Our job as an educator is simply to teach you how to trade. And this was the same way I was taught. Now, when I first started trading some 42 years ago on the floor of the exchange, I struggled tremendously. I was lucky enough to have some mentors who taught me the same way I teach my students by sharing these sound, fundamental techniques, methods, and strategies. So as you can see here, my goal is not to force feed you signals. It's not to force feed you the perfect market or the perfect time frame or to tell you this is what you should buy and sell on a nightly basis. I don't do that. What I do is share with you high probability setups, high probability strategies and methods. And then we have a number of ways for you to enter, a number of ways for you to exit, and a number of ways for you to place your stops. And then we work with you so that you can decide for yourself how you want to trade that high probability setup. And if you want to trade it at all, if you don't want to trade it, you can wait for another one that makes you feel more comfortable. Okay? This is a specialist edge, the same edge that I was taught some 4 decades ago, and hopefully it will sustain you now for 4 decades. Now, since this is going to be an educational classroom, please ask me as many questions as possible. I want to answer each and every one of them, but we're also a little bit different in that we don't stop at every slide to ask or answer a question, I should say. So please, if you have a question, write it down and try to remember it. I promise I'll get to it at the very end of today's class. I'll reserve the last 15 or so minutes for it. The only question I will answer is this, and that is this being recorded? Yes, it is. We record all of our webinars, so if you have to leave early or if you're having technical issues, don't worry, we will send each and every one of you a link to this recording, okay? So please remember, we have a good crowd here today. I don't want to take all of your Wednesday morning, so if you have a question, just wait till the end to ask them. All right, with that said, let us begin today's educational presentation. Now, we're going to be talking about pullback strategy number 9, and I've outlined pullback here because I'm sure there are a lot of you that aren't familiar with what a pullback is. So let me just give you a brief refresher course, because it's a certain style of trading which allows you to buy low and sell high. For example, as we look at this generic chart, here's the way you would have a pullback buy setup take place. All right, we see that in this very generic stick figure here that the market, let's say, is going up. All right, you have a nice uptrend, but the markets don't usually go straight up. We go into this type of scenario. We have what traders call whipsaw, or a change of trend, and a lot of times it's consolidating and they think we're just kind of hitting some type of resistance before we go much lower. Well, in this bracket, this is where the pullback trader looks for some certain requirements to be met, because if the requirements are met, if the strategy rules are met, usually on this sell-off here, it will generate a buy. So this is a pullback buy scenario. You want to buy at the low of this little sell-off within the overall uptrend. And why are you buying? Because most likely the trend will resume and you'll have a nice profit. Okay? That's what a pullback buy looks like. That works the same way if you're selling. In this generic example we see here, we have a downward market, and then we go into this scenario where we kind of hit some type of support and we kind of bounce. And this is where a lot of people think, well, the trend is changing. We've hit a bottom. There's major support here. The institutions, it's some Fibonacci level, so we've got to cover our short and go long. But this is where the pullback trader looks for these requirements to be met, because if we have a bounce and you see that the rules have been all satisfied, well, you usually have a pullback sell somewhere within this little bounce. And that's a great place to sell at the higher level before the trend resumes, okay, if in fact it does. Now, this is why this strategy lends itself to option traders, because a lot of times when you have these bounces and you want to sell, you can purchase some puts or some type of spread strategy that has a bias towards the downside, where the premiums are less expensive. So a lot of traders who like to trade pullbacks like to trade options as well. Okay, so strategy number 9 is a pullback-based strategy. Let's talk about some of the highlights. It's designed to trade moderate to deep pullbacks. That means A moderate pullback lasts anywhere from 2 to 3 days, maybe 5 days. A deep pullback can last much longer, and it's really exemplified by the large swing in price, okay? Because of this, because of the moderate to deep pullback going against the overall trend, you can apply options to this, as I just said. Now, this can be applied, strategy 9, to any market, any time frame, in any direction. I'll show you some examples. Even though the majority of the examples today I will show are on stocks, you can virtually apply it to any market. It can be Bitcoin, it can be currency pairs, it can be commodities. I like to use it with intraday E-mini futures trading. Now, as with all of our strategies, if you become and decide to become a member of this course, please, we always advise our students around the world, in over 115 countries actually, and in virtually every state, to paper trade first. Because most students always jump in too quickly without really properly studying and knowing the method like the back of their hand, and then they lose money. And then the first thing they say is, Steve, this doesn't work, I want a refund. I ask them to show me their work, and then they're almost always executing the rules incorrectly. So please, paper trade so that you fully understand the process. Our edge here with all of our methods, including strategy number 9, is consistency. Now, consistency does not mean that, well, I guess it's consistent, it means all the trades are winners. No, consistency actually means the opposite. It means the awareness that you will have losses from time to time. That is perfectly admissible. That's okay. A consistent method is a method that is aware that it will have a loss here or there, but feels confident enough because it knows that this method will most likely recoup that loss very quickly. So that's what we mean by consistency, the awareness of losses, but being confident in the method to recoup that loss, oftentimes on the very next trade. In fact, I will show you a couple of examples where there were some losses where the method recouped them on the very next trade. Okay? Now, just a few more insights about strategy number 9. Although, I'm sorry, I can't give you the actual rules to this because it's so simple. It only uses 2 requirements. But I can share one of them with you for telling the requirements for an overall uptrend or an overall downtrend. But it employs 2 simple requirements. Now, their relationship to price automatically will generate the signals. These are requirements that are met to generate a buy or a sell signal. Now, in an overall uptrend, obviously, buy signals will be generated during a decline, like I just showed you in that chart. In an overall downtrend, sell signals will be generated during a rally, like I shared with you in the chart, okay? So that's the basic process, okay? That's the basic way pullbacks work. And let me share with you some examples of strategy number 9 setups. So these are fairly recent, going the last month or so, and I'll show you a trade that actually happened just a few days ago. Now remember, this is a very simple process, although students have difficulty with it, so that's why I teamed up with Pro Trader Strategies to develop our platform, the PTS Primo Charting Platform, because it's an educational platform that actually makes it simple to trade pullbacks. There's an actual process that you'll go through, and I'll share with you just exactly what that is. And you'll see how simple it is to implement this process. Okay, so let's look at this chart here in Tesla, all right? This is at the end of September coming into October, just about 2 weeks ago. Someone looking at this would say, well, Steve, we're in an uptrend. I mean, we're steadily going higher, not that much lower, but I think we're going higher. So I'm going to be a buyer of this, okay? That's the way most traders trade and make their decisions, or else they go to a chat room and some guy likes Tesla. So they say, okay, I'm going to buy Tesla. Here's what you first have to do. You have to determine the overall trend, because that's going to tell us if we're having that bounce or that sell-off within the overall trend. That's going to tell us if we're having a pullback. All right, so how do we do that? Here's the process. On our platform, click on the buy-sell line. Well, first of all, we see here that, look what happened. We broke down, okay? So right off the bat, someone would say, okay, well, the overall trend is down because we broke down. All right, so that means I'm a seller because we broke that line, that uptrend, and obviously some news came out, and this is the way most traders make their decision. Let me show you the process. We click on the buy-sell line, a drop-down menu appears, and we click on 50-period moving average. We have 4 different ways to view the buy-sell line. It's simply the 50-period moving average, okay? So let's click on the first option, and the 50-period moving average appears. Now, how do we use this? Well, if we have a close above the 50-period moving average, if the majority of the bars are above the 50-period, that's telling you the overall trend is up. Now, you usually need 3 to 5 bars closing either above or below that to tell you the overall trend. Well, as we can see here, all of these bars closed above. Even this one, most of the day was below. It still closed just barely above. So the overall trend is up. I don't care if somebody says, well, Tesla broke down. That was a bad earnings report or some bad news came out, so we have to sell that. That's not a good sign. If we close above, then the overall trend is still up. All right, so now let's say you were a member of the Strategy Number 9 course, you know the rules, and you've done the studying, the process, you've paper traded, and you say to yourself, well, you know what? I think this is a Strategy Number 9 buy signal. So how do you check your work? Well, in our upper green strategy tab right here, you go to Strategy Number 9, click it on, and the drop-down menu appears. Just click on Signal Arrows. This will show you if you're right. Now, if you're right, you'll see a signal arrow there. If you're wrong, no arrow will appear. So how do we check our work? By clicking on Signal Arrow. And guess what? You're right. So you know how to properly identify a Strategy Number 9 buy setup. Now, in the future, you probably won't have to rely on this at all, but this is how we develop this educational platform so you could understand the process. Now, we want to get you as our students to the point where you no longer have to rely on that, where you know automatically where a buy setup is and where a sell setup is. But as you're learning, let's say you're using these arrows, okay, you could decide to take this trade, but it would have been a wise decision because the stock went up 25 points coming into October 14th, okay, just this past week. Not a bad little trade, right? You think you could have done well buying some calls in this? All right, let's look at another example, YNDX. All right, let's tell you how, firstly, how most traders make their decisions. They'll look at this chart and say, well, Steve, I took that $10,000 class in support and resistance, and all the institutions are buying right here using that proprietary tool. So this is major support, so we've got an uptrend going here. So I don't want to be a seller of this, I want to be a buyer. Let's click on the buy-sell line. Let's find out what it's telling us. We click on the 50-period moving average, and where is price in relation to this? Price is below. So that's not saying that the overall trend is up. We don't care what the institutions are doing or what the support levels are doing. Trust me, I was using that 40 years ago. There's no consistency in those methods. The easiest thing to do is apply a 50-period moving average and ask yourself where price is in relation to that. Obviously, price is below. So what's that telling you? It's not me telling you this. It's not some guy in a chat room. It's not some convoluted support resistance level tool. It's simply the market telling you that the overall trend is down. So rather than looking at this as support, this is simply a pullback little bounce. So what we want to do is take advantage of this. All right. Now remember, you've studied the rules to Strategy Number 9, and you think that you may see a setup here in this little pullback. So you want to check your work. In order to do that, click on Strategy Number 9 in the drop-down menu, click on Signal Arrow, and you're right. In fact, there were two sell signals generated right here. This was on October 9th and 10th, just last week, last Wednesday and Thursday. Guess what? 7 points in one day, okay? Obviously, some news came out or some event happened where it caused the stock to gap down and go down 7 points in one day. Did we know anything about that? No, because it's not required to follow fundamental news. Well, I can tell you that fundamental news is not a requirement of this. We're only doing one thing. We're listening to the source. And if you ask yourself, what is the source? The source is the chart in front of you. It's extremely simple to listen to the market once you know how. It just about, I would say, 80 to 90% of the time tells you what's going to happen in advance, but you have to know how to listen to it. And this is what we do. We teach you, along with our platform, how to listen to pullback trades and setups. All right, here's an example on ZTS. Wow, here we are definitely in a downtrend. We have a bearish engulfing pattern. We're really falling out of bed here. You don't want to buy this stock, right? Well, where are the closes in relation to the 50? They're all above. So the overall trend is down. So this may actually be a buying opportunity. This may be a very deep pullback. All right, you study the process, you check it out, and guess what? You actually had 3 buy signals here. Now, this one didn't work out too well. If you had a very tight stop, well, perhaps you would have been stopped out on the next bar. But that's okay. This is where you get back on in the game because these 2 buy signals would have generated a nice profit to the upside in ZTS, okay? Remember, the simplest thing you can do right now is apply the 50-period moving average to all of your charts. I don't care if you trade commodities, if you trade currency pairs. I don't care if you trade tick charts. Always have a 50-period moving average there because that tells you the overall trend. Here's an example in Urban URBN, all right? How could we have taken advantage? This is kind of a whipsaw going down, back up, going down. It's kind of hard to tell what this is doing. Well, not really, because if you apply the 50-period moving average, we see that at this point we had 3 closes above, So it's telling us we are in an overall uptrend. Even though we had one close below, the very next bar closed above. Remember, you need 3 to 5 consecutive closes either above or below to tell you what the overall trend is. And so at this point, we knew the overall trend is up. Now, we had a sell-off right here, which is actually just a moderate pullback. And strategy number 9 generated a buy signal here. And look what happened after that. A very nice quick 5 points you could have taken advantage of. And now price started to sell off again. Are we in a downtrend? No, because we're still above the 50. This is just a pullback in an overall uptrend. If all the requirements are met, a buy signal should be generated. But the requirements need to be met. Just because we're selling off does not mean a buy signal will be generated. The requirements in this two-rule strategy need to be met, and they were. We actually had 2 buy signals generated right here for another 5-point gain. So this was very simple. This was just like a month ago in Urban. Now, someone looking at Netflix in July would have said, well, it looks like we bottomed out. This is a really nice, strong uptrend. Look, we're closing at the high almost for the last 3 days. I mean, Steve, you said that's a very powerful signal, right? Well, yes, I have said that that's very powerful when you see bars close in the upper 25% of their range, as long, though, as they are above the 50. We have to add the 50. So where is the 50 now? Now, looking at this, it didn't work very well. So what happened? Well, price has been below the 50-period moving average. That's why. Remember, you never want to swim against the current. You never want to swim upstream. You always want to swim with the current at your back. The current is the 50-period moving average. You can start doing this right now. Go and look at your last 10 or 20 trades, regardless of what system or strategy you use. I can almost guarantee you that the reason why you lost was because you were out of sync with the 50-period moving average. You were probably buying below the 50 and selling above. You'll have more consistency if you're in sync with the 50-period moving average. So now, as opposed to trying to look at this as some buying opportunity, we apply strategy number 9 requirements, and we see that we actually had this as a selling opportunity. This was a pullback to the upside. The requirements were met, so we sold. And then there was another moderate pullback right here. It lasted about a week or two until it finally kicked in. Had you taken the very first setup, potentially you could have captured 83 points coming into October. All right, here's an example of consistency, what we mean by consistency. Remember, consistency does not mean that every trade's a winner. For some reason, people think that when they say this is a very consistent method. Consistency means that you are aware you will have losses. A consistent method is a method that's able to recoup those losses, okay? The sooner, the better. Now, here we have a buy signal in Pepsi, PEP, all right? We're above the 50. All the bars are. We have a moderate sell-off, a pullback, so we go long, and on the very next couple of bars here, we see that that was a wrong decision. It didn't work. It doesn't work 100% of the time. Had you used one of our natural, stop losses, the very moderate ones, you most likely would have been stopped out in the next bar and lost about 3 points, okay? Now, the way most traders do, when they don't study the work or they don't really feel confident, they'll say, this doesn't work. They'll throw it out the window. They'll go sulk for the next week, and when you do that, you miss opportunities to recoup your losses. Not guaranteed, but oftentimes they're right there on the very next setup because the very next week, a sell signal was generated. And someone will say, well, I don't understand. You had a buy signal. How could you automatically now have a sell signal? Well, remember, originally all the bars were above the 50-period moving average. But at this point, we had 1, 2, 3, 4, 5 closes below. So that is now telling us that the trend has changed. The overall trend is down. And now we're looking for little bounces to sell. So we have this moderate bounce to the upside here. So where most traders would sulk, you have to get back on the horse. You have to get back in the game and try to recoup it because this generated a quick 8 points. Now you could have recouped your loss and said, well, this is what I know that Steve means by consistent. Okay? Here's the chart. We originally started the presentation with an apple where we said how in hindsight, sure, this looked like it was going up a nice stair step, but how could we have taken advantage of these lower levels right here, okay? Well, remember, you add the 50-period moving average, and here we had 1, 2 closes below, I should say, but the very next close was above. Here we had 1 close below, but then we closed back above, and then we remained above. So remember, you need 3 to 5 closes below the 50 to tell you that the overall trend is down. So since we didn't have even 3 consecutive closes, these were all buying opportunities because they were sell-offs. And once you applied the rules And the requirements of strategy number 9, you see that you had a number of chances to buy at those lower levels. Had you taken the very first setup right here on this very deep pullback, that would have potentially captured you 38 points if you stayed in the trade long enough. Now, I know a lot of you are saying, okay, Steve, well, where would I have gotten out? Where's the exit signal? Where's my stop? We teach you those things in the course, okay? And in fact, we have upwards of 6 to 8 different stop, entry, and exit levels. It's not our job to tell you how to enter and how to exit. It's your job. It's our job to provide you with consistent modes of entry and exit. It's your job to decide which one makes you feel the most comfortable. Remember, you will not be a consistent trader unless you make your own decisions. We're not here to tell you exactly where to buy and exactly where to sell. We're providing you with high probability setups and then giving you choices of where to enter and where to exit. It's all up to you. Everyone has different risk parameter ranges. Everyone has a different way of trading. Some traders like to say, you know what, Steve, I'm the kind of guy that likes to get in and out quickly. I only like to be in the trade for maybe 3 to 5 days. Well, okay, maybe you would have taken one of our short exits and exited right here and then gotten out of the trade and then gotten in again and gotten out right here and then got in again here and then got out right here. Whereas someone would say, well, no, Steve, I like to be in it for the long haul. Well, maybe you could have potentially captured the full 38 points. We teach you ways in which to do that. It's entirely up to you. There are no right or wrong answers. The only wrong answer is when you blindly follow someone on TV or in a chat room or in some $10,000 system you bought that tells you where to buy and where to sell, and you basically take yourself out of the game. I mean, that for me is a recipe for a disaster. Why do I say that? Well, because when I first started trading some 42 years ago, that's what I did. And trust me, I couldn't make a dime. So it's not about to start working now. All right, here's an example in TA. The same example to the downside. Nothing really goes straight down all the time. You have these kind of stair steps. So looking at it right here, well, sure, it looked kind of like things were okay, but then we really fell out of bed. Then it looks like we were bouncing, and then it fell out of bed. Well, if we applied the buy-sell line along with our strategy number 9 signals, we would have seen that we were below the 50-period moving average for the majority of the time, and the sell signals generated all these nice spots to go short, okay? Here's an example in letter G, all right? This is the way most traders trade again. They'll say this, and say, Steve, this is really negative. You have a bearish engulfing pattern right here, so that's telling me that the trend's down. I don't want to buy anything right here. This is the way most traders trade, once again, myself included. Now, if you think this is a downtrend, you're really going to most likely lose a lot of money just based off this information. The first thing you need to do is apply the 50. And the majority of price is above. We only had one close below. And in fact, this, even though it's difficult to see, actually closed above it. So the overall trend is still intact. If you apply the requirements to strategy number 9, you'll see that a buy signal was generated right there. And the very next day in August, the stock went up 8 points in the very next 2 days. Could have had a nice option trade right there, right? Okay, let's look at XL and X. Once again, how do most traders trade? They'll see this, they'll say, well, we have some major support here. All the institutions are buying. Also, the volume confirms this, so I really like this. Plus, that guy in the chat room I go to says they like this stock, so we're in an uptrend. So I'm going to buy this stock, okay? All right. What is the market telling us? Not some guy in a chat room, not some guy on TV. What's the market telling us? Well, if we apply the 50, it's telling us that the overall trend is down. You see how we only listen to what the market's telling us. We don't care what an institution is doing. We don't really care about earnings reports. I stopped looking at that 42 years ago. So if I'm still able to trade without even looking at any news, you should be able to trade that way if you decide to do so as well. It's entirely up to you. But there's absolutely no requirement to look at those things. So as you can see, this is not an uptrend at all. This is an opportunity to sell because this is a pullback opportunity. Now, if the requirements are met, you would have seen that we actually had a number of selling opportunities right here in XLNX, and the stock went down 17 points, okay? Now, if these first two didn't work out well, say you got stopped out, once again, you could have gotten right back in on the very next set of sells and recouped that loss. Now, let's look at some different time frames and some different markets because we know that not everyone trades daily bars of stocks. Let's look at some weekly time frames and let's look at some other markets as well. Okay, here's a weekly chart of RGLD. Once again, looks like we're in a downtrend, right? We apply the buy-sell line. We go through the exact same process. If you're a swing trader that likes to trade weekly bars, nothing changes because we're looking at a different time frame. We apply the buy-sell line, which is the 50-period moving average. And we see here that we had the majority of bars above it. We had two closes below it, but then we bounced back up. So this is not enough to tell us that the overall trend is down. The overall trend is still up. Now, if the requirements are met, we'll have some buy setups here. Now, according to the studying we've been doing and the paper trading, we think we found a buy signal. So we check our work. We click on strategy number 9, click on signal arrows. You see the way we designed this so you can actually learn how to identify setups? And we see here that we had a couple of setups. We had one here and one here. Let's say you took this first one and it didn't work out. You got stopped out, okay? Remember, a consistent method, although it's not guaranteed, many times will recoup the loss, often on the very next setup. So in this case, it would have been the right decision because, well, 54 points, I think you could have made back that initial loss on the very first setup. How about this example in OI, okay? Someone looking at this would say, well, Steve, this is a very bullish signal here. We have a bullish engulfing pattern at the bottom of this downtrend. So that's telling me we're going to go higher. And we have another one right here. So the market is screaming that it wants to go higher, right? Not necessarily. Okay, those are good signs if you are above the 50. But where is price in relation to the 50? Are we in an actual uptrend? Once we apply the buy-sell line, we see that no, we're not. We've had the majority of closes below the 50. So this is a selling opportunity. This is not an uptrend. This is a pullback in an overall downtrend. So you should be looking to sell, not to buy. Let's see how well these bullish engulfing patterns worked. Well, we apply strategy number 9, and we see here that we have a sell right here. So how can this be the beginning of an uptrend when the stock fell 9 points? What happened to the bullish engulfing pattern? What happened to the support? What happened to the indicators telling you that this was going higher? Do you see how powerful the 50-period moving average line is? You can start using that right now. Let's look at another market. Let's look at the euro dollar, okay? Once again, we have this stair-step process of going lower because the majority of stocks and currency pairs, futures, commodities, Bitcoin, cryptocurrencies, do not just go straight up or straight down. Maybe about 15% of the time they will, but the majority of the time they will have this stair-step process. So how do we take advantage of that? Well, this is where we want to sell if we knew in advance that we were in a downtrend. Well, we apply the 50 period along with our strategy buy and sell indicators, or I should say buy and sell arrows, and we see that we had a number of sells right at the top of this bounce that could have potentially captured 270 pips. Then we have another bounce, and right at the top of this one, we have another sell signal that could have potentially captured 185 pips coming into October. All right, that's a daily chart of the euro dollar. Let's go to a 15-minute chart of the E-mini, which was on October 10th coming into October 11th, just last week, okay? Not even a week ago. In hindsight, obviously, the E-mini was going higher on a 15-minute time frame. How could we have taken advantage, though, of these lower areas? Well, we applied the 50, and we knew well in advance that the overall trend was up, even on a 15-minute time frame. So that means we're only going to be a buyer. We're never going to sell this. And then if we apply strategy number 9, look at all the buy setups we could have taken advantage of. Some better than others, obviously. But had you taken the very first ones right here on October 10th, potentially you could have captured 80 points coming into October 11th. That was last Friday. That's $4,000 potentially you could have captured per contract. All right. Remember, it's up to you how long or how short you want to be in a trade. You could have stayed and said, I made 2 points, I'm out. That's fine. There's nothing wrong with that. Or you could have stayed, I'm going to stay in for 100 points. It's up to you. We just show you the different ways and exit levels and entry levels in which to apply. Now, let's review before we go into the question and answer portion. Remember, strategy number 9 is a moderate to deep pullback strategy. What that means is if we're in an overall uptrend, we're looking for a sell-off. If we're in an overall downtrend, we're looking for a moderate to deep bounce. All right. Now, this is designed to trade pullbacks with two simple indicators. It's a very, very simple process. Probably one of our most simplest methods we have at Specialist Trading and Pro Trader Strategies. Now, by buying lower and selling higher, this helps with option trading. So because you're buying on a sell-off in an overall uptrend, many times the premiums will be lower if you want to buy the calls. And it works the same if you're trying to buy puts, okay? So if you're an option trader, this may be the strategy to go with. You can apply this to any market, any time frame, in any direction. I just showed you weekly bars, daily bars, euro dollar, E-mini futures. You can also apply it to commodities and Bitcoin. It makes no difference, okay? But remember, if you decide to become a student of mine, please paper trade this method first. In fact, that is the one requirement that we state. You must paper trade it. Our edge here is consistency. I showed you a few trades where we actually had losses, but I showed you the consistency in a method that's able to recoup those losses. Now, as we come here to the end of 2019, seriously, you owe it to yourself to finish 2019 in the right direction, okay? Do you think strategy number 9 can help you do that? We have a great offer for all the attendees today. For taking the time out and coming here and me present today, we have a great attendee offer. We're going to offer you strategy number 9 along with 1 year of our platform, which allows you to do that simple process of trading strategy number 9. You're going to get complete and detailed video course instruction, all the entries, all the exits, and all the stop placements, the entire course rules, okay? Plus, this comes with 1 year of the PTS Primo charting platform. That's a over $1,700 value. But let me share with you what's included with the platform, because we're not going to just say, well, it gives you the up and down arrows and the 50-period moving average. There's so much more that comes with this, because you're going to be able to actually scan for nightly setups if you like. Let me show you the process here with our scanner, which is included in our platform. It's so simple. All you have to do is simply hit load signals, or load symbols, I should say, for whatever market, whatever index you're looking at, and it does this in a matter of seconds, and we supply you with those indexes and the data. And then just simply hit scan, and you'll see a series of green and red horizontal bars. The green bars simply mean that's a buy signal in the corresponding stock. The red ones mean it's a sell signal. So you can come home every night and scan for these setups. It makes it so simple to scan through literally hundreds of charts in just roughly minutes. Let me show you an example of what you could have scanned for in the last week or so. Let's look at Costco right here, okay? Once again, here's the way most traders would trade. They'd say, wait a minute, Steve, this is a downtrend, okay? I've been taught that we're making lower lows and lower highs. Plus, I took that $5,000 candlestick course, and we have a bearish engulfing pattern right here. We have another bearish engulfing pattern right here. So this stock's really going to go lower. I wouldn't touch this with a 10-foot pole, right? It's the way most traders trade, myself included some 42 years ago, because I was trading bullish and bearish engulfing patterns the same way most people trade them now. Until my mentors taught me this. They said, Steve, you have to add the 50-period moving average. That's more important than any candlestick, more important than any institution, more important than any other indicator, because that tells you whether you should be a buyer or a seller. So the majority of closes are above. In fact, all closes are above. So this is not going down right now. Until we have 3 to 5 closes below that, the overall trend is up. And what you may see as a sell-off, as a downtrend, is actually a buying opportunity. Now, if you know the rules, you would check your work, click on strategy number 9, and click on signal arrows, and you would have seen that on the 2nd of October, a few weeks ago, a buy signal was generated in Costco. You could have scanned for that, and it would have scanned for that on the 2nd. You could have scanned for that 5 minutes before the close or on the close. It's up to you. And as you can see, the stock went up 15 points in 1 week coming into last week, okay? Not a bad little option trade right there. You could have bought some calls the next day or so. Or how about this? We're looking at PAGS, P-A-G-S. Obviously, someone would say, well, Steve, we're in an uptrend here. This is a slow, steady uptrend, but, higher highs, higher lows. I don't want to short this. It's kind of steadily going over. This is a very organized and very systematic uptrend. Is it really? Because once you apply the 50 period, all that is a bounce in an overall downtrend because price is below the 50. So this will help you tremendously going through this process. You'll be on the right side of the market by applying this. Okay, so if this is a slow, steady bounce, it's actually a selling opportunity. Once you know the rules to strategy number 9, you'd have seen that there was a sell signal generated Monday. You could have scanned for this with our scanner on the platform. That night it would have told you to go short. You could have scanned for this 5 minutes before the close, and most likely the signal would have been generated because it's not that difficult. It's very simple. And you could have purchased puts, or if you had enough capital, actually gone short the stock. It's up to you. But guess what? The stock dropped 10 points the next day. Now, did we know it was going to drop 10 points? Absolutely not. All we knew is that the market was telling us not to buy this, and then actually it wanted to go lower. Okay? Most likely you would have covered the next day with a 10-point gain or on the opening. It was up to you. 2019 is almost over. In fact, we only have a couple of months left. A year from today, trust me, you will have wished you became a member of the Strategy Number 9 course. So here's how to take advantage of this. Here's a great offer we have for you, okay? Now, here's our premier pullback strategy special for all the attendees today. You're going to get Strategy Number 9 along with 1 year of the platform. Now, the platform alone, 1 year, is over $1,700 value. Normally, both of these things together would cost you over $4,700. We're not going to charge you $4,700. We're going to reduce the price down to $29.95. You're going to save $17.40 because we're including 1 year free of the platform, okay? Now, we realize that still not everyone can come up with $29.95. Therefore, we're also going to include payment plans. So for a small deposit that you can construct with Pro Trader Strategies, my sister site, you can still be up and running with this great way to have the pullback special strategy, okay, along with 1 year of the platform. So here's how to take advantage of this. Contact Pro Trader Strategies. I developed the platform with them, and they handle all of our course tech support as well as our discounts. You can email them at trading@protraderstrategies.com. I would suggest contacting them by phoning them. They have qualified trading consultants manning the phones right now. Call them at 310-598-6677. They will be happy to discuss a payment plan with you. They can work with you. So for a small deposit, once again, you can be up and running as early as today. You can be studying the material in the course, and you can be emailing me. Because one thing I forgot to mention, once you become a student of mine, you have my personal email address, and you can contact me whenever you'd like, okay? Now, that link you see at the very bottom is the link that will take you to the sign-up page. You can also, click that on, but I believe that's not a live link. So if you look here on the chat box on the far right, you'll see that there has been a link posted there. Just click that on. It will take you right to the sign-up page, okay? Okay, with that stated, we are at the end of today's presentation. I want to thank you so much for attending today. If you have a question, now is the time to ask. I see some people have already asked some questions. Let me see here. Someone is asking, will this work on intraday stocks? Yes, it will. Now, I know I showed you intraday E-mini futures, but trust me, if you're an intraday stock trader, you'll see the same type of setups happening over and over again, all right? It absolutely does not matter if you are trading a daily, a weekly, or even a monthly chart. The same process applies. You firstly want to apply the 50-period moving average to tell you what the overall trend is, okay? We taught you that today, and you can start using that right now. In fact, I would say go experiment with that and see how powerful that is. Once you know what side of the market to be on, whether a buyer or a seller, then you can apply the requirements to strategy number 9 to see if setups are being generated, okay? But yes, so if you're an intraday stock trader, it can work beautifully. 5-minute charts, 10-minute charts, it's actually up to you, even tick charts, okay? Someone's saying, can I apply it to my current platform? Yes, you can. We have the add-ons as well. Let's say you trade with TradeStation or through Metastock or MT4 or NinjaTrader or Thinkorswim. We have the add-ons for those platforms or qualifying with those platforms so that it will automatically generate the up and down arrows for strategy number 9 setup. So yes, we do have the add-ons for that. Someone's saying, well, Steve, how do you contact us with educational correspondence? Oh, well, I give you my personal email address once you become a member of the course, and you can email me anytime you like. I get emails on the weekends. I answer them on the weekends. I get emails in the middle of the night. It makes no difference. So yes, you're always free to email me. And if you have a question about strategy number 9, a question about the markets, a question about actual trading, you can always email me and I will answer you as quickly as possible. So that's another thing that comes with it. As your mentor, I'll be there with you every step of the way to answer your questions, okay? This is a great strategy. I use this personally myself. I use it in intraday trading of the E-mini futures. So trust me, it can be applied to any market, any time frame, in any direction, okay? I guess there are no more questions. As we come to the end of this presentation, I just want to say thank you so much for attending. Remember, we only have just roughly 2 more months left in the year. If you really want to start out 2020 in the right direction, and if you really want to complete 2019 in the right direction, this is a great way to do so. Pro Trader Strategies will be happy to work with you with setting up a payment plan for a small deposit. You do not have to come up with that lump sum of $29.95. Even though that's still a great discount, you can come up with a smaller amount, a small deposit, and still be up and running. But that's for a limited time only. So please, contact Pro Trader Strategies. There's absolutely no obligation. They would be happy to answer any of your questions. Don't feel as if you call up, you're going to have to purchase something. They would be happy to answer any questions without any obligation, okay? They just want to keep you informed, and we're trying to educate you as our educators, okay? Now, as we close, I just want to say one more time, thank you so much for attending. I hope you learned a little bit today. I really wish you the best of luck as you take one last look at our disclaimer. But more importantly, I look forward to all of you becoming students of mine in the Strategy Number 9 course, along with the PTS Primo Charting Platform application. Thank you so much for attending today. I shall see you next time. Bye-bye.